unless something unexpected happens, like I mentioned in that piece, if a worse type of war breaks out, or if there's more kind of financial war going on, there are scenarios that can absolutely result in a big print or a nuclear print. Um, but when the really big numbers happen, like the QE1 happened at a time where banks were extremely levered. They had very
Hmm.
little cash relative to either their total assets or relative to their deposit base. That was kind of peak long-term debt cycle in the private sector. And so you start from a tiny base and you go up to pretty big, high cash ratios. Now, I mean, bank cash ratios are still pretty high. Um, and as long as you don't have something like COVID scale disruption to the economy, which can always happen, but it's not my base case, then I wouldn't really see printing of that magnitude happening. Now you look out far enough, anything can happen. But when you have, like, say, a 1 to 2 year starting point for analysis and say, well, what's going to happen in that time frame? They've kind of hit the rough floor for how much cash they can take out of the system.
Mm.
There are some levers they can pull if, like, for example, the new chairman does try to get the balance sheet down, unlike Jerome Powell. But I think they'll be limited in that. Um, and just right now, when you kind of run the numbers of how much debt is coming out, how much money supply is growing, how levered or unlevered banks are, they just don't really need a lot of printing. A little printing gets them a long way.
Mm.
The Fed can buy a little bit of the bonds, and then also as that expands the size of the banking system, they can also buy bonds on fractional reserve. So I think that the system is going to go on for quite a while in a state that doesn't need massive printing.